Let's take a look at equities locally. Harry Watt joining us from Shaw and Partners and Market Matters. Harry, good to catch up with you. Did you have a chance to look at those ANZ numbers at all?
I haven't had a run through on those ANZ numbers yet. I think banks will come out and say a very similar thing, though, that cost of living pressures will eventually have a pretty meaningful impact on their books. But overall, they've done pretty well. And I think what we've really got to focus on at the moment with the banks is their net interest margin. There's always been talk around how that net interest margin should improve with higher rates from the RBA, but we haven't really seen that come through. Do we start to see that come through now as those sort of fixed loans roll off and roll back onto the variable rates? Maybe we see the banks lift their NIMs from here.
All right. Well, look, we know earnings season is well and truly underway in the States. Here it is all about AGMs. You've got your eye on three stocks in particular. Interested to see what you're focusing on here. Your first one is Calix. In fact, that was brought up just in relation to perhaps being a beneficiary from the budget.
Yeah, yeah. Well, there's a lot of money there for ESG and sort of green investment, and Calix is certainly in this realm. I think more importantly for Calix at the moment, they've just signed a deal with a major international cement producer. This is sort of the first of its kind for Calix. It came with a $60 million raise, institutional placement from the company as well. That was really reasonably well bid, and the stocks rallied post that placement as well. So it's good to see some money coming into the stock post a big capital raise. This deal, from our point of view, is pretty transformative for Calix. I guess one of the lingering issues in the back of investor minds for this stock has been how do they sort of shape deals with companies. They've got technology that can apply to a whole host of different areas. You think water safety and cement and water safety. They're just sort of one or two aspects of what they can apply their technology to. And cement's been the first mover this time. How this sort of shapes up in terms of every other producer out there. Their technology really drives down the emissions. You think cement's an 8% of global emissions. That's massive in terms of how bad that is for the environment. So Calix comes in, they sign a big deal, get this underway, and maybe this applies to a number of other companies that they can get deals done with.
All right, another company you're looking at off the back of its AGM, Audinate. That's in the audio-visual tech market. Why are you looking at this one?
So Audinate's a pretty great company. It's done really well since its IPO a number of years ago. Their AGM, they came out and said that they've got a huge backlog of orders that need to be filled. And we haven't seen customers move away from Audinate despite this sort of delay that they've had supplying that. It's not Audinate's issue in terms of supply. It's been a chip issue, chip shortage globally that's affected Audinate and another number of other suppliers out there. But this AGM, they started to talk about how they can combine their audio hardware, their visual now that they're bringing in as well, and their software offering too. So if you put that all together into a package, how customers then go and pick out a product. If they've got Audinate enabled products that they can offer, that they can install, that sort of combines the whole sort of setup for the customer as well. So it makes sense to have one sort of big product. Audinate is sort of cornerstoned this market, and now that they're going to offer video and software on top of their already large audio offering, I think that sort of sets them up really well. They are expensive. It's really hard to argue that they aren't expensive, but in terms of the market opportunity that Audinate have going forward, I think it's massive, and Audinate have certainly put themselves in a pretty good position here.
All right, Harry, let's round it out with another company you're looking at post AGM, the telco Aussie Broadband. What are you seeing here?
Yeah, it was a really disappointing FY22 for Aussie Broadband. They had the over-the-wire acquisition that they completed late in the year, and that's really weighed on the stock, that and sort of lagging connections numbers. I think we slated their full year results a couple of months ago, and I think that sort of then that rhetoric of maybe that's the low in terms of their growth issues going forward, then that's sort of what we're starting to see out of this AGM as well. So we've started to see connections pick up. We've started to see costs fall as well, NBN costs fall as well. We were talking about the budget before too. There is a little bit of a little kicker in there for Aussie Broadband. They are winning the most market share in NBN connections, and the government's gone out and said they're going to spend some more money and put another 1.5 million connections, fibre connections to houses out there as well. So that's just another tailwind for Aussie Broadband. We've got Origin as well. They white label Aussie Broadband's product, and Origin have started to pick up their connections too. So by and large, I think that they were a little bit ahead of the curve in their FY22 results, really talking down their expectations. AGM's come out and the market's now really comfortable with where their guidance is and what they can produce in FY23. And it's a company that's reasonably cheap as well. It's on about 7.5, 8 times EV to EBITDA, with a fair bit of growth built in, and a bit of cost out as well on the back of that acquisition.